Hello, everybody, and welcome to the Speaking of Insurance podcast. My name is Aaron Bollinger,
I'm Brian Bollinger.
and today's topic is going to be general liability insurance, something that all business owners should have, right, Brian?
Yes, it covers you for most things, but there are lots of exclusions.
Okay, so can you explain what general liability insurance actually covers and what it doesn't in plain English?
Plain English, I'll try. So, general liability covers your business for most things. However, there are exclusions. It doesn't cover workers, that's workers' comp. It doesn't cover auto, that's commercial auto. It can have some riders on it that give you limited hired and non-owned auto liability coverage, but that's on a case-by-case basis. It covers people coming into your workplace and slipping and falling. It covers sometimes if you have a product that you're selling to somebody, it might include product liability. So if somebody breaks a tooth on a nut, that might be covered. However, sometimes there are exclusions that say we will not cover broken tooth for nuts. So you have to always read the policy to really get into those kinds of details. But at a high level, that's what it does.
So what's one of the most common general liability claims you see? You mentioned slip and fall claims. Why do those happen so often too?
Well, if you're a grocery store or a janitor or something like that, you've got the public is around, where you're working and the things that you're doing. And so the probability or the potential liability for slip and fall claims are a lot higher. Now, there are things people do to mitigate the claims, right? They have a lot of non-slip flooring. They try to not use oils and waxes like they used to make shiny floors. There's things we're doing now that are probably smarter than they were, 30 years ago to help reduce those potentials. However, there's still things like you go to a restaurant and there's ice on the floor or water on the floor, and slip and falls do happen.
And so those type of claims, why do we see them so frequently? It's just because they're happening more?
I don't know if they're actually happening more. I think it's maybe people are, again, there might be more litigation in this regard. I haven't seen the claim data, and I haven't asked, to be honest with you. But my feeling is I don't see it being a whole lot more than it used to be. It might just be that the claims costs have gone up. So one of the challenges, like with general liability, is it tends to be fairly inexpensive for most people until you start having claims. Once you start having claims, the premium goes up significantly. And so zero claims is the goal, and zero claims we strive for. But again, everybody's case is different. I know we can get into other topics if you like.
Okay, well, let's get into those other topics. So why do so many general liability claims show up after a job is finished?
Well, if you're a contractor, right, you have the premises liability when you're there on the job site. You could have some exposure there. But for the most part, that's going to be workers' compensation coverage, right? It's going to be workers on the job site. It's not open to the public. So there's really not as much general liability risk at that point in time. Once you've completed the project, however, that's when the claims start to happen because that's when the public is around. So when the public comes into like a Jack in the Box or a Chick-fil-A or a McDonald's or Pizza Hut or whatever, name your favorite fast food restaurant, and it's a brand new location, it gets into things like, how low, are the lights on the table if they have like little candle lights dangling, so they might bang their head and cut their head. That could become a liability claim. It's a premises liability claim to the actual restaurant, but then it's also a general liability, completed operations, the work that the actual contractor did that put those lights in. So you could have a situation where one incident can trigger two different insurance policies to possibly, respond, and it gets kind of complicated. So it gets into strips of insurance and how we structure things in the contract to minimize the amount of overlap or finger pointing between insurance companies. But these are the kinds of things that happen at a high level.
Yeah, and so they say that, general liability doesn't cover bad work, right? So what's the difference between that poor workmanship and the quality of that workmanship and the resulting damage that could come from that?
Yeah, let's talk about that. I mean, I've had some cases, I'd use things like, you can talk about a tree trimmer trimming a tree and a tree branch falls on somebody on a sidewalk. I mean, you use that example. But I think the better example might be if somebody has like a tile facade on a building and a tile were to fall, off of it. Maybe it's ice, snow melting, could be a number of different things. It could be factors that influence how durable these surfaces are. Something falls onto the person. Let's call it a tile pops off of the front of a building and falls and hits somebody in the head, right? In that situation, you have a liability claim at the premises level because that's where the location the person got hurt, so that's the restaurant. But the contract to put that tile in might not have done the work correctly. It's not paying to replace the work that he did. That's his own workmanship. That's kind of on him. That's not really included on the general liability per se. However, the actual injury that ensued, that bodily injury portion of that claim, that tile falling and actually hitting the person, that would be a covered event.
Obviously, depending on the policy form and everything like that, everything's contingent upon your policy, but just in general.
It's just high level, like trying to give you like a constructional construct. Your situation, your court case may not be accurate in this regard. Certain cases, court cases, can interpret these things differently. There's so many facts and opinions and things in this, but at a high level, just plain English level, the workmanship itself isn't covered. That contractor has to fix the tiles and do it right, do their work well. And then the second part of it is, if there was a liability, bodily injury claim, that would be what the product liability responding to.
And I know that a lot of business owners say, oh, I've never had a claim. In general liability insurance, I mean, why does that not really matter?
Well, it kind of doesn't matter in insurance in general. And the reason why, the whole premise of insurance is insurance companies, let's say, insure 10,000 businesses just like yours, and they collect, let's say, $1,000 each. They get $10 million of premiums coming in the door. Hypothetical, just round numbers. So they have bucket of $10 million. So it may not be you that gets hit for that $1 million claim, but one of those people will get hit. You know what I mean? So there will be money going out, being paid either on big claims or small claims on a fairly regular basis. And so that actual profitability of the insurance business might only be 30 to 80%, let's say 20% maybe net profit, and then 80% could be paid out in terms of claims.
So, I mean, we've talked about the severity of some of these claims and how frequent they do happen. I mean, obviously slip and falls and things like that, incidental things. Why do these contracts and landlords require these specific general liability limits? And what happens if a business doesn't meet them? Is it like a bond?
Well, there could be breach of contract, causes of action. Again, talk to your attorney. We're not giving legal advice here, but there are potential issues where a landlord or a building contractor, enter into agreements, contracts, and they want everything under the sun. Usually the insurance policies give them most of what they want. However, there are some things sometimes that, like contract penalties and things like that, delay of construction, that may not be coverable or recoverable under the insurance policy. However, in some cases there could be performance bonds and other things that can help protect the building owner from, delays in construction and allow them to have resources to hire somebody new to complete the building should there be substantial issues with the current builder.
And general liability ties into that. Obviously, I mean, if you're somebody who owns a property, right, and you're having contractors work on it, you want that assurance that the job will be done. Then also you do want appropriate general liability limits. Why would that be in the interest of the owner of the property?
Well, the owner of the building, really, the way insurance works in general, right? You think about it this way. All insurance does is it transfers the risk of something from one party to another, right? So in the contract, that's what the contract's doing. It's defining who's taking the risk, who's getting the money, who's doing the work. These things are being defined. The insurance contract kind of does the same thing between the insured and the insurance company. And they say, hey, this is what we're going to cover you for, this is what we're not going to cover you for. And you have to kind of get a feel for what's covered and what's not. And how much liability insurance you have. So it depends on a case-by-case basis.
One thing that I know a lot of people in this industry who might be listening to this deal with is certificates of insurance, and they might be confusing to a lot of people. What does a certificate of insurance prove, and does it change anything, like any of your coverages?
Kind of think of a certificate of insurance just kind of like a summary sheet. It's a one-page deal. It kind of says this is the coverage you have. Here's some policy numbers. It's a place you can go to 5-10 years down the road to see if there is a liability claim that crops up. You can say, oh, Joe did this work. Joe's Plumbing did this work. And Joe Plumbing was with XYZ Insurance Company in 2020. We have this problem, and we think we might have coverage under this policy. Again, it may not be the bursting of the pipe, but it might be the damage the pipe did. And so something about his work may not have been done correctly. So that's what the landlords basically do and the property building owners do, the general contractors too for that matter. They retain these records for typically 7 years to 10 years. In some cases we go 15 or 20. Now with everything being digital, it's so much easier than it used to be. It depends on your state, mind you, so definitely look at your state regulations. However, you have that as kind of a summary reference sheet. It doesn't list all the necessary inclusions, exclusions, wording forms, nor court interpretations for that particular state that you're a part of. Right? Some of these insurance policies are 300 or 400 pages long, and that's just what the policy says. However, it's still subject to court interpretation. So litigation, right? People are going to be arguing different specific points. There could be established case law, and those case laws do evolve over time. So sometimes it gets overruled or it gets reinterpreted in a different way in certain situations. And again, it's trying to give people peace of mind that there is insurance in force, but it doesn't necessarily answer every single question that you would have as a true building owner to know exactly is every conceivable loss event covered. In general, if you were to ask somebody that question, the honest answer would have to be no. We have no way of knowing if every single conceivable thing would be covered. We're pretty confident that's probably not the case because, again, there are exclusions for things for like auto coverage might be excluded on the general liability policy. Workers' compensation is excluded on that policy. Sexual abuse and molestation coverage for a lot of companies is excluded. EPLI, employment practices liability insurance, is excluded. There's a number of exclusions on these policies, and so it's not like you can just say, "Hey, every single event that happens will be covered." How I kind of think about insurance in general is kind of like a slice of Swiss cheese. I don't know if you like Swiss cheese or not. Probably not. I don't mind it. It's not my favorite, but I do like it nonetheless. If it's a slice of Swiss cheese, you got this big meaty piece of cheese, nice and thick cut, but it's got these holes, and we call those coverage gaps. And so one of the challenges by developing and designing an insurance program for clients is to try to create a program that actually fills in the necessary gaps in coverage with coverages that might be applicable for that your particular situation. And again, in the building owner's perspective, they want certain things to be covered. And some of which it will be in the contract, but they may not be insurable. So they might be like make goods or your work, things that have to be done, rework things that have to be repaired, post construction that may not be covered by general liability, but might be in the contract. So there's a number of things that gets into specific details that it's on a case by case basis needs to be looked at.
And obviously the type of coverage that is being looked for is circumstantial and depends on the project that you're working on. But I mean, even in events where claims turn out to be baseless, how expensive can those legal defenses get? And does general liability help out with paying some of those expenses?
It can. It all depends, right? I mean, there is a duty to defend in a lot of these policies. But then again, the counter narrative by the insurance company's perspective is they're typically publicly traded companies and they have shareholders that actually have, they have fiduciary rights to not just pay out claims willy-nilly. They actually have to just pay what they're contractually required to pay. And so there can be some gray zone interpretation, negotiation, these kinds of things. But yeah, legal fees, attorney retainers could be $10, $20, $30, $40, $50,000 for something even on a pre-trial basis. I mean, we've seen some pre-trial claims more on the not bodily, but more like employment practices liability areas where there's a lot of depositions and a lot of documentation requests and things like that. We've seen those go into the low six figures just for defense, excluding settlements. Most of the general construction policies, like if you're a commercial building operator or a general contractor, those tend to be a little bit easier settled. Those parties seem to be professional. They're not trying to necessarily sue each other. If you're the business owner, you're trying to get your building fixed. If you're the contractor, you're trying to keep a good reputation, so you're trying to get it fixed. If your sub didn't do the work properly or there was some kind of an issue, you might have to go ahead and ask them to fix it for free or fix it and try to bill them the difference. So these are the kinds of things and strategies people use to try to avoid having claims in the first place. But secondly, if they do have claims or issues arise, you can handle them professionally too.
So that's why you always say general liability is the foundation of most business insurance programs, is because of how robust it can be at helping you in specific incidental things.
Yeah, it's super important that people, look at that policy, think of that as a foundation of coverage. It doesn't solve all problems. It doesn't cover professional liability exposures, so fee-for-service kind of things that you do. There are just a number of exclusions, but it does cover a number of your bases, and it is a great foundational policy to have. So definitely want you to, look into that, think about it. And also, not every insurance company has the same insurance form, and not every insurance company interprets the policy forms the same either. So some companies are more generous and lenient than others. So you have to kind of keep it all in mind. But any other question you want to add to this?
Yeah, I think that there's just one more. And so Obviously, we want to make sure that people are covered correctly, and that's our number one goal. What are some signs that people can see just face value on that declarations page, or maybe if they see a couple exclusions, that a business owner can look at their general liability coverage and determine whether or not it's set up correctly for them?
It's hard to do. I mean, the challenge with everything in insurance, it all starts with the underwriting file. That's that application you filled out before you actually got the policy. The policy itself is a secondary thing. So what we really want to do is start with the foundation, start with the application, look at how you answer those questions, make sure you've completed those correctly, and then it builds from there. So it's the deck pages and even the policy. It's hard for us to interpret. I'm not a legal scholar, and I know attorneys that they say, you know, which side are you on? That's how they interpret the contract. So. Yeah. Anything else you'd like to talk about?
Is there any example or story where you have seen general liability either be the difference maker with a claim, or maybe not because of an exclusion?
I've seen both. I mean, we'd have to go into some very specific details and nuanced things. Depends on your industry, but we will do some additional videos getting into those different topics.
And different examples that you've seen in your plethora of business experience in terms of the liability insurances and all different lines of insurance. I think that there are stories to be told, campfire stories, I bet.
Yeah, it's a layered cake, and it's just one of the layers. So, okay, well, thank you both. Thank you very much, and you have a great day.
Yep, thank you so much. Have a great rest of your day.